Let's talk about Lordstown Motors. What is happening, investors? It is your boy Jack. I am not a financial advisor, and I hope you're all having a fantastic day. Unless you are Steve Burns, in which case, in a while since we spoke about the company. Obviously, it's been one of the most painful stocks I've ever spoken about. Currently at $5.50 a share. Not even at a $1 billion market cap. Oof. Now, although I haven't been making constant videos on the company as we have been in the past, I've still been keeping up to date with them. And today, something kind of weird happened. So there is actually quite a few things I want to speak about. The first one is this article from Seek and Alpha that came out a few days ago. Lordstown Motors, target of a smear campaign. Now, look, I'm not here to try and convince anybody to buy, sell, hold, do options, do anything with Lordstown Motors. I want to make that extraordinarily clear at the start of today's video. Do not let this video influence your decisions going forwards with this company in any way whatsoever. But I did think this article in particular was quite interesting because, quite frankly, there has been nothing but negative news, being portrayed in the media. But I have seen some contradictions in the media as of late from certain very, very big names. So this is where we're going to start it off. We're going to start it off right here. There's a few other random bits and pieces, such as this. Lordstown Motors developing a military electric vehicle. We'll briefly speak about that. You will see 18th of August, we have 1,500 plus units ordered at this time. This tweet was taken down and people aren't particularly sure why just yet. So we're going to look into that a little bit, who Pride EV are, why this is important, especially considering the fact that Lordstown Motors has said themselves they could go bankrupt within the next 12 months, considering all of the drama that's going on in regards to the pre-orders, which, the article we're going to speak about today really just shows that it's so silly, and it always has been. Aside from that, I want to show you what some of the biggest institutional investors have done over the last couple of months with their Lordstown positions, which will more than likely surprise an awful lot of people. Perhaps the fact that there's 199 institutional investors long and only 8 who are short. We're going to look at what Morgan Stanley's done, considering some of the things they've had to say in the past, and just a few different bits and pieces. We'll speak about the short interest, the institutional ownership, all of that good stuff, baby. I feel like this intro's already been long enough, so please hit that juicy like button, maybe drop me a comment down below, and subscribe if you're new around here. And with that being said, Lordstown Motors, target of a smear campaign. Now, for me, I think this is an interesting one because, as I said, there's been a lot of negativity in the media in regards to Lordstown Motors, and I don't think anybody's going to argue that fact. There has most certainly been a bias, and some of that bias is coming from hedge funds. And when it gets interesting is when you see certain hedge funds have been picking it up despite releasing, bearish news. The first thing I want to bring up that this article brings up: double standards against Lordstown. So back in March, everybody's going to remember this. Hindenburg Research, the notorious short selling firm, a very, very successful short selling firm. You do not want them going against your company at the end of the day, okay? What they did was they released a document questioning Lordstown Motors, and everybody's going to be aware of this. The main arguments, okay, were about pre-orders, Steve Burns' character, who's now gone. The bears used Steve Burns as a point for them, and now they're using it as a point against the company now that he's gone, whatever. And a vehicle fire. Pre-orders, okay? Just think about this for a moment. Everybody knew these were non-binding pre-orders. If you didn't look into the company for more than 4.5 milliseconds. It really is that simple. The vehicle is not yet cleared for sale. They cannot make binding orders. The same goes for Fisker, Ford, Rivian, all of them. They have refundable reservations. Binding orders are not possible. This really shouldn't have even been an argument from day one, and it's one of the single biggest arguments that bears brought up. And this was all over the place. Jim Cramer kept going on about it. Every single news source did. There's an interview here with the Ford CEO shortly after the lightning reveal where he stated, "We have 20,000 orders." He doesn't even say pre-orders, never mind non-binding pre-orders. He said 20,000 orders. If there are any problems here, it is probable that the blame falls on the consultants hired to find customers and not Lordstown Motors. And again, yeah, I think this is a point that people, bears in particular, people who want Lordstown Motors to fail, decide to look past. And I think there's much better points you can bring up in a bear thesis against Lordstown, because I'm going to tell you now, there's a lot of them. I mean, it's been high risk, high reward from day one, and things have, in certain areas, gotten worse since, before they were even a public company, such as all of the scandals with Steve Burns, the fact he's gone now the CFO too. They're real arguments. This one isn't. At Lordstown Week, it was still said that they're laser focused on hitting our initial production target at the end of September. A lot of people are still asking the question, and fairly enough, who's actually going to buy these? But again, that screenshot I showed you earlier, Pride EV has their 1,500 plus units ordered. And this isn't some publicity. This isn't them just putting it in for fun. They plan on buying these 1,500 vehicles, which for Lordstown Motors in the position they're in right now equates to maybe 4/5, if not 3/4 or so, of $100 million. That's a lot of money for Lordstown Motors right now. An awful lot of money. The character of Steve Burns, I already addressed that. And the January vehicle fire, I mean, seriously, if that's an argument to you, like, that's just, it means nothing. It happens. For the latest launch of plug and escape SUV after European fires, it's happened with everyone. Now, actual reasons to be concerned, and that's why I'm going through this article, because I love the fact it's been included here. The departure of the CEO and CFO are going concerns about funds, okay? So let's think about it for a moment. We all know Lordstown Motors have said themselves they may not have enough funds to last a year. Is it going to be easy to get funds without, a strong, confident CEO in place? No, not whatsoever. Now, we did get this news not too long ago. Lordstown Motors says hedge fund may buy up to 400 million in stock. We've spoken about this. Yep, it's a good thing, but still, you are going to need a strong CEO in order for anything such as this to happen. This is a big concern, okay? It really, really is. This is something that needs to happen. A lot of people are asking me, why haven't I bought more recently? Considering I was willing to buy them in the 20s, because things have simply put changed. And there still is a very real possibility that Lordstown Motors goes down lower. Things need to happen. Good things need to happen for a recovery to happen, in my opinion. Still have all of the pieces in place. Still could be a beautiful company. That's why I'm still holding my shares. Maybe I'm just bag holding at this stage. But things have to happen to justify buying at these prices now, because fundamentally, things have changed. One of the most important things when it comes to investing in a company is the management team. So when I look at this 400 million, in my eyes, it's more of a safety net than anything. And I think once we have the new CEO in there, once there's more vehicles being produced, once we have actual sales, I think it will be a lot easier to raise funding. The question is, can they get there first? Possibly the best funding option for Lordstown is to be granted an ATVM loan from the government. Tesla received such a loan in the amount of nearly $500 million in 2010, just 6 months before they would have run out of funds. And we all know Ohio's done this in the past. I believe it was last December. They were given somewhere along the lines of 20 million or so. I might not be right with the exact figure. But the Ohio government, the people in Ohio are behind this company still. And not just Ohio, but the government in general. There are incentives there. The criteria are straightforward, okay? Manufacture ultra-efficient vehicles which achieve a fuel efficiency of 75 miles per gallon or equivalent. Lordstown, yes. Re-equip, modernize, or expand existing facilities. Yes, they're huge factory that there's zero debt on, by the way. Located in the United States, yes. Provide a reasonable prospect of repayment. Definitely possible. If the determining factor of them being profitable in the future, if they can show these guys, look, here's real pre-orders, here are people who are paying, we have guaranteed, we have contracts, it should be very, very possible to then get a loan such as this one. So when you look at all these things, does bankruptcy really look like a reality in the next 12 months? In my opinion, no. I think it's more of a formality having to file these things than anything else. I know obviously they won't want to, but there is nothing set in stone, so they have to. Right now, it's really easy to be against Lordstown Motors. They're in a bad place, simply put. But a lot of companies have been in bad places and turned things around. Maybe it's almost a rite of passage for these innovative companies. Again, Tesla 2010. Lordstown has done more with less, okay? Their SPAC valuation was approximately $1.6 billion, now sitting at sub $1 billion. Compared to Fisker at $3 billion, Lucid at $24 billion, that's a different story. Rivian was valued at $27.6 billion when it raised funds this past January. They have made their cash go as far as they can, and now they need more, as startups often do. So the conclusion from this author, you can read it on the screen now, pause it if you want. In my opinion, it still is what it always has been. There's a reason we call companies like this high risk, high reward. You can't just choose to listen to the high reward part. If you're going to chase innovative pre-revenue, startup companies, there's a huge risk. And things like the CEO leaving can happen. Things such as funding issues arising can and do happen to nearly every single company like this. And things can go wrong, and that's where the risk comes in. And then you see things like this. Lordstown Motors is developing a military electric vehicle. Look, I don't even know why this has to be news right now. I don't think this is something to care about personally. But what I would say is if this came out a year ago, people would have been so bullish. This would have made the company move 15-20% in itself. People would have screamed government contracts, etc., etc. There's a different bias in the media right now, so this doesn't matter. So in regards to this screenshot here from Pride EV, Our launch is just days away, and we are so excited to share more of our upcoming lineup. We will carry the Lordstown Motors endurance model, okay? Somebody asked, what's the order number? We have 1,500 plus units ordered at this time. Since then, tweets have been deleted. Now, we're not sure if this is Lordstown Motors trying to hide it, if it's the PR team, etc., etc. We're not sure what exactly is going on, but it's there. It was on their Twitter. This is Pride EV right here, okay? Pride Group Enterprises. You can go onto their website, look at their headquarters, and you can cross-reference it with Pride EV. Now, who are Pride Group Enterprises? A privately held diversified group whose subsidiaries and affiliates operate in a variety of industries, including transportation, logistics, etc., etc. Largest Canadian retailer of used trucks and trailers, Pride Truck Sales. T-Pine Leasing Capital provides equipment financing to customers across Canada and the USA. Pride Group Logistics, it's in the name. T-Pine Truck Rentals, Pride Diesel. You get the picture. They're across the US and Canada. They have very established customer bases as it is, and they've put in a 1,500 vehicle order, which again, I think is somewhere in the realms of $75 to $80 million for Lordstown. Obviously, that's not all going to be written down as profit. Lordstown is not going to be profitable for a long time to come, but that still is money on the balance sheet. That still is showing some inflows. That still is what can get you real good funding at not ridiculous rates going forwards. One more thing I'd like to do, Lordstown Motors Corp, largest quarterly institutional transactions. Look, there's been some big ones. The top 10 owners, Lordstown Motors, the Vanguard Group, okay? A 5.6% stake. Nearly 10 million shares owned. They've been buying shares up. The latest institutional activity we have is from the 30th of June. BlackRock funds bought 4.9 million shares. SSGA funds 2.6 million. Bank of America Securities 1.7 million. This is when the company costed a whole lot more. Morgan Stanley June 10th discontinued coverage on Lordstown Motors. The prior rating was underperformed with an $8 price target. Analyst Adam Jonas commented, "We remove our underweight rating on Ride as we believe the market may be underestimating the economic, strategic, political, and social risks which are difficult to quantify," and that's fair enough. The outcomes for the stock may be highly volatile. There's no maybe about it. They will be highly volatile, and we prefer to watch from the sidelines. June 10th, that came out. 18th of the 5th reporting date from Morgan Stanley, they owned 179,000 shares, okay? Quarterly change, plus 124%. The 23rd of the 8th, just gone, their shares have gone up to 186,000. They have gone up again. Now, not that this is a huge amount of shares for Morgan Stanley or anything, but you get the picture. Institutional buying and selling by quarter. Q3, look, 171 million in shares bought, 15 million in shares sold. The agenda in the news right now is terrible. It's that Lordstown Motors is guaranteed going to $0 or $1. Why are institutions buying it up then? Why is there essentially 200 institutions with only long positions and only 8 with only short positions? Why over the last week and a half have all these people been buying up shares of the company? No, I'm not trying to hide it. There's been lots of buys and lots of sells all over the place. Loads of people closing out their positions, blah, blah, blah. But there's been an awful lot more buying than selling lately. And when you see the likes of BlackRock Fund with their 4.9 million shares, keep in mind institutional shares are currently at about 32.21% of the float. Short interest is at about 27.78%. There's a small float there, thus the high volatility. Also, we saw Workhorse, who were a huge stakeholder in the company, sell off an awful lot of their shares recently, and it's expected that they've still been selling some every single day. It's also expected that the majority of their shares could well be gone at this stage, and that could have been driving the share price down. Now, that's a theory. That is by no means fact. We won't find that out for a considerable period of time still, but it's worth keeping in mind because we can assume that they are selling at least something. They will be contributing to the downwards pressure. So, I mean, we still see huge institutional ownership, and we also see huge short interest. The company is down massively, about 70%. You would think that there's going to be some weird movement soon. But to look at these guys as a company, not just as a stock right now, I think there's a lot more to the story than we're being told. And I think there's some things being held back from us as of right now. But what I do want to make extraordinarily clear is I think the next 2, 3, 4 quarters are all going to be extremely bumpy. So much is going to happen. And in honesty, so much has to happen for them to not be absolutely horrific and even furtherly devastating to investors, because let's be honest, it's been absolutely terrible. But right now, for me personally, it's just about, waiting to see what they can actually do. Because keep in mind, when we were excited, when things were looking good, when they were going up $15, $20, $30 a share, we still didn't have vehicles on the road. We still did not have guaranteed orders. They still had a lot of things to go through. and they're still there right now. But they are advancing, and that's what's going on behind the scenes right now. They are slowly but surely advancing. They are getting closer day by day to those vehicle productions, to the actual sales happening at some stage. And that's been going on for months and months and months now. I couldn't blame anybody at all for selling out of this company. I contemplated it on numerous occasions, but there's something about them. I still think this could be a turnaround story. If you're already out, I don't know if you need to rush to get back in all honesty. I think it's going to be a weird journey for a while. But me personally, I'm just holding on to what I got. But anyway, guys, that's my update video on this. If you watched all the way till the end, you, my friend, are indeed a true legend. I really do appreciate you being here. If you enjoyed me making this video, could I please ask you to hit that juicy like button, because I can already smell all of the dislikes, because that's what happens when I make a video on a company like this now. And if you did enjoy and you want to see more content, do hit that juicy red subscribe button. All of that helps me out massively, and it really motivates me to keep going. But anyway, guys, I hope you all have a beautiful, blessed day. I'll see you in another video very soon. Peace.